Hello and welcome. You're watching India Market Open. It's midweek, and despite weak global cues, guys, implied Nifty still indicating to a 7th straight day of market gains this morning.
We're defying all odds. We're defying all odds if you look at what's happening around the world. But India is literally on its own trip. Fantastic close yesterday, right in the fag end. And Agam, you're betting that we're going to continue seeing that momentum?
I don't know if the momentum will continue, but we're certainly going to see the Nifty and the Bank Nifty remain where they are because of HDFC Bank's contribution now starting to come through as far as maintaining these indices are concerned. I'm going to, of course, talk a lot more in detail about this, but HDFC Bank's recovery is a positive for the markets.
So another question is, how much can Shashi talk fuel the change in sentiment on HDFC Bank? All that and more, of course, on the trade setup. But let's quickly take you through what's happening across the world and the global cues that are going to matter. So global cues aren't that positive, frankly speaking. And in US markets, what's weighing down is your tech stocks. Valuations have run up massively, and the key culprit there would be Nvidia. In fact, the Nasdaq closed, nearly 1% down, over 140 points. Now, Nvidia, ahead of its numbers, of its quarterly results, dropped about 4.5%. But put it in perspective, just in 2024, this chip maker has run up 40%. All the mega caps have run up massively. So what you're seeing possibly is a bit of profit booking. You saw in that sense the 10-year also ease off, back below 4.3% on the 10-year treasury. So a bit of relief over there. Remember, it's a truncated week of trade as far as US markets are concerned. On crude, an interesting play. Crude has actually slid, and one of the reasons could be where you're not seeing that much firmness, at least in the Brent. You're seeing the NYMEX rates right now, but at least in the Brent, is because gas prices have plummeted in the US. Because of El Nino, they're expecting a warmer winter. You're going to see cheaper gas, and then perhaps demand for crude will not go up as much as well. Asia is the other one that we should pull up before we get to what's going to happen domestically and the trade setup here. Asia across the board is looking mixed in a sense. Japan a little weak because business sentiment index has come in quite lowest since April last year, actually. Hang Seng in the green. So mixed cues in Asia. Perhaps we will beat that overall trend and look at a positive start here. At least implied open is showing a slightly positive start, Agam.
Yeah. So a bunch of things that we want to address here. Firstly, that sure, we are at life highs at the moment, and we are looking at a little bit of momentum. But the traders around now are not as convinced of the sharp up move because of valuations, as well as, well, several other challenges with respect to the market. And perhaps some amount of consolidation is also on the cards. But what is also positive is that the base around 22,000 has been further strengthened, and that's indicated by further put writing. Moreover, on the higher end, your higher end of the range has also shifted higher, and now we're looking at some amount of resistance, perhaps around 22,500, 22,600. And this is not just pertaining to this week, but also perhaps going into the next week. But as I've suggested, a lot of analysts out there are of the opinion that the Nifty perhaps would not move up substantially higher from these market levels, but consolidation is not out of the question at the moment. Now, the big move in yesterday's day of trade and the outperformance came from the Bank Nifty, and that was largely on account of HDFC Bank. The Bank Nifty moved above the mark of 47,000. It also moved and broke out from a certain range it was trading within over the past 10 to 12 odd sessions. And now that it is closed above 47,000, the question is that can we expect a little more short covering? A lot of that was on account of HDFC Bank. In fact, HDFC February futures open interest declined by as much as 8%. And as we know that it was the top contributor as far as the Bank Nifty and the Nifty's advance yesterday was concerned. So we certainly are looking at that little bit of strength building in it. And we are in fact looking at advances for Kotak Mahindra Bank as well, which contributed to the rally along with Axis Bank and ICICI Bank, which have been relatively stable of late. So That perhaps at the moment is providing the bulk of the support to the key indices. The question really is that are we looking at consolidation, and if we are, can we expect the seas of volatility? That's something that we're going to keep an eye on.
Just to bring in HDFC Bank, Agam, you talked about how that was the key contributor and potentially could be a big contributor to the Nifty, even if it has to sustain at these levels. And it's not FIs. For the longest time, we've talked about how FIs are the ones that actually like stocks like HDFC Bank, and the DI interest has largely been across the broader markets. But to just put numbers to this, it's not just the FIs. You had Parag Parikh that increased its stake on HDFC Bank as of the end of Jan statement by about 23% to be precise. You had a whole bunch of PMS, so Unify, case in point, increased their exposure to HDFC Bank. You've had a whole host of other mutual funds, PMS, have actually gone out and increased allocation to HDFC Bank. So this time around, the story about this bank is not about FIs and the love that they have for the counter. I think it's unanimously talked about of how HDFC Bank is attractive or was attractive at 1400.
So the big takeaway is smart money is back on HDFC Bank, and one way or the other, you're going to see that.
Yeah, and I think it's about time, and I think the management has done whatever. They were very. I mean, they also, I think the street's got to be empathetic now, right?
Yeah.
They've told us and they've indicated that there were mistakes made, communication was a challenge, and they will fix all that. And I think that's what investors are taking heart from. That's the HDFC Bank story. Talking about the markets, I do agree. It's going to be maybe an extended period of consolidation, largely because there are no more triggers left. You've got the elections, which is still a few months out. You've got earnings that's behind us, which have largely been in line. I saw a Citi note this morning that said that FIIs or FPIs are waiting on the sidelines. So while India looks very tempting, there is a strategic story, there is a long-term play that's underway, valuations still look very stretched. So they will be on the sidelines until either there's a price or a time correction. And I think while a price correction, not necessarily, but a time correction at this stage may be warranted. The VIX continues to remain above 16. So while the trend has been pretty solid for the last 6 days, the VIX at 16 is what may give a little bit of room for some easing coming in on the markets. But let's take you through stocks. Lots of counters to watch out for. It's the last few earnings that we've got, and it's ABP that reported numbers. A pretty solid set of earnings coming in from ABP. Revenue was up 13.6% to come in at 2,757 crores versus 2,426 crores. EBITDA was up 14.5%. Margins were also flattish, so they were at about 15.13 versus 15%. Net profit saw a jump of nearly 11% to report a 338 crore profit for the quarter versus 305 that was seen in the same quarter last year. So you want to take a note of that. They also approved a final dividend to the quantum of 23.8 rupees per share. So looks good for ABP in terms of earnings. It would be a stock you want to watch out for. It's been an underperformer over the last 6 weeks, but a little bit of gain could not be ruled out in today's day of trade. The other few that you want to watch is Hindalco. Remember, the stock had lost 12% post Novelis reporting its earnings a week ago. The concern on Novelis was not really the earnings, but the cost and delay in their project, which led to the counter losing over 12% in the last 1 week. What you want to take note of this morning is that its crown jewel Novelis now is going to be seeking approvals for listing on the US markets. Now, what this will mean for Hindalco, we will of course break it down for you and talk to an analyst to understand what this is going to mean. Hindalco, remember, is the only stakeholder in Novelis. Novelis is a market leader in aluminium cans worldwide. It's been a solid performer. The business has also changed since Hindalco took over this company. Big money will come in for Hindalco. Now, the valuations, whether or not this money will be paid out in the form of some dividends to investors, is something we will discuss. And the timelines, of course, are a few other factors that you want to take a check of. But for now, all we know is that they've applied for a listing. That's all the details we have in terms of reporting. Well, Devyani International, smaller one, Yum, which owned 4.4% stake in Devyani, is looking to offload that through a block deal. Remember, Yum is the owner of KFC, Pizza Hut, and Taco Bell in India, and Devyani is the franchise distributor for these products. The business model will continue, but Yum will be making its exit. May be viewed as a positive on the street because 4.4% is not a significant stake, and this overhang may be now finally coming to an end. But we cannot stick our neck out and say that this will move up. There could be a little bit of a negative trade on the counter before which it starts moving up in the medium term. I want to talk on Minda Corp and pre-call in a minute, but I think we'll finish the other counters and then jump back in.
Yeah. So just focus a bit on Z, because what whirlwind moves this counter has been having, and we reported yesterday when there was a story that they're looking at renegotiating the Z-Sony deal. We reported that those conversations are ordinary conversations that their lawyers are having. The company then clarified to the exchanges that no such talks are on. But there is another Bloomberg report which might sour sentiments further for the stock, which ran up nearly 8% yesterday, which says SEBI has found a large diversion of funds. They clock it at 20 billion rupees. And remember, that's something that SEBI is anyway investigating. So that might add a bit to the negative sentiment. DLF is the other one that we should watch. And DLF had a pretty good run yesterday on the back of, you had financials and you had real estate performing decently. So the news here is that one of their units has signed a pact with Access Trustee Service. They're going to acquire about 29 acres of land parcels in Haryana for 1,200 odd crores, 1,241 crores. This transaction is going to be facilitated by redemption of bonds that the company is holding. So that's about 775 crores there. And earlier they acquired bonds worth 825 crores via mortgages on land parcels in Haryana. So that Haryana expansion and that Haryana aggressive move might be looked at as positively. Swan Energy is the other one. They're going to raise money. So, that's typical of a bull market where you have fundraising. So, a QIP, it will raise about 4,000 crore rupees for Swan Energy. Floor price is at 703. For the QIP. Stock is at 751 right now. The proceeds are going to be used for investments into units and for repayments or prepayments of borrowings as well. And Systematics is managing that deal. So Swan is one that you should keep on your radar as well. Agam, what's on your list?
So Swan Energy is a very interesting one because it's grown about 6 times in just 1 year.
Absolutely.
So, of course, it wasn't my radar until you spoke about it. But besides that, we are looking at Deepak Fertilizers. What's really interesting is that we've seen a sharp surge in volumes yesterday. It was up as much as 4%. And, a lot of this, in terms of the volumes delivery, we are looking at some interesting moves here because volumes at 16 times 3-month daily average, delivery volumes at 5 times 1-month daily average. And remember that Deepak Fertilizers has seen a lot of weakness of late. And considering the way things have panned out for Deepak Fertilizers and the kind of buying that came through in yesterday's day of trade, the question really is that whether or not we have seen an end of that weak period, and can we now start seeing a little bit of an up move, or are we looking at some amount of mean reversion? Based on that, the support could perhaps currently be at around 480, 490. That's the lows of the previous few sessions. So that's something that we'll be watching out for. And the other stock that I'm keeping an eye on is Sundaram Finance. This one made a life high yesterday. It was up around nearly 8%. It broke out of a near 7 to 8 day range. And of course, we are looking at intraday volumes highest in 3 weeks. Once again, the support will be perhaps at somewhere around the 2-day low of around 182. But don't forget, the company also ran up after its Q3 earnings, where it saw a good 24% growth in its net profit. And that perhaps is the reason why a lot of investors are looking to buy into something like a Sundaram Finance. So these are the other two stocks which you can keep on your radar in today's day of trade.
Yes.
Just a couple of more that I would add, Agam. One is Wipro. Remember, the entire tech pack was fairly weak yesterday.
Yeah.
And Wipro, though, a couple of interesting news points which I wanted to put focus on. One is that it's in a pact with Intel Foundry for collaboration on chip design and process node development. And at least as far as our Indian IT biggies are concerned, how fast are they moving in the direction of, an NVIDIA, AI, chips, etc. is going to be on the radar. Second thing is that it's expanding its pact with IBM as well to establish a centralized tech hub to offer new AI service and support to clients. They've launched a Wipro Enterprises AI Ready platform that will leverage IBM's Watson AI and data platform to create enterprise-level, fully integrated and customized AI environments. LTI Mindtree had a similar story yesterday where, they've got their own AGI for procurement. It's going to cut costs. And the AI play on tech companies is going to be key to watch, at least from a medium to long term. Just quickly, a mention on this note from Morgan Stanley on Hero Motor, because Hero Motor took quite a tumble during closing yesterday, and especially in the fag end of it, frankly. So Morgan Stanley says that they believe the share price will fall relative to the Nifty over the next 30 days. So about of weakness then. And if you look at the line chart intraday, quite a bit of weakness. It closed near its day's lows, 4% down. So the stock has outperformed Nifty by about 13% in 2024 so far, and trades at 21 times FY25 PE. The retail market share is also pretty decent, but there's limited valuation support and slowing sales is a concern. There was Vahan data which came out yesterday, and remember, Vahan data is the actual registration of vehicles bought and sold. So a little different from what FADA and the companies themselves put out. This is actually what people have bought instead of what's perhaps lying in the factories or in the showrooms, and that showed a bit of slowdown. So that muted the mood for a Hero and a Bajaj as well. So those are a couple of stocks we need to watch out for. But the big story this morning, of course, is Novelis, and Rakesh Arora, founder of Go India Stocks, joins us on the phone line now to break down the Novelis IPO news and what it means for Hindalco. Rakesh, very good morning. Thank you for speaking with us ahead of trade and help us understand the perspective on this. Now, the idea is it going to be more than just sentimental when it comes to the Novelis IPO? And I was just looking at a Nuvama note which says that the event could be sentimentally positive, but it's not too clear what Hindalco gets out of it. How do you break it down?
So clearly, the motive of Novelis IPO appears to be value unlocking. Novelis is largely a green business, whereas Hindalco is a little bit of a dirty business. They use coal. And that's why the valuations are much lower for, any business which is polluting. So I think because the money is coming to, shareholders of Novelis, and so clearly they don't really need money for Novelis itself for growth. So that is one thing is very clear. Number two is Hindalco itself is a cash-rich balance sheet. So they really don't need money for the Hindalco operations also. So I think the main motive is definitely value unlocking, that some ESG funds and, global funds who are cognizant of ESG things are likely to flock to Novelis. In India, Novelis is being valued by analysts at around 8 times EBITDA, but I think if it is a pure green, play, maybe it can get valued at 12 to 15 times EBITDA. So I think that is what is the motive here. And so let's wait and see how it plays out.
Rakesh, in terms of the negative sentiment around the Novelis news, when during their analyst call, they made it clear that a very large project of theirs, the Bay Minute project, is going to overrun in terms of expenses, up significantly over 60% in terms of costs and time run. And that really hit the Hindalco stock. Do you think that has now been digested and that overhang has been now accepted by the street?
Yeah, largely I would say that, that knee-jerk reaction we saw post the Novelis results is kind of factored in the lower returns potential from the expansion. And so I think the big question here is whether the re-rating in Novelis, which one would expect being a purer green play, would it, counter the holding company discount which will creep in once, you have minorities in Novelis. And also one needs to factor in that all the FIs which are into Hindalco right now might want to shift to Novelis as a pure play. So there could be, some selling pressure from FIs too. So both these things, this, makes it a little bit difficult to think. So sentimentally maybe positive, but, I do agree that from a long-term perspective, we have to wait and see what kind of valuations Novelis is able to, garner as compared to the holding company discount which is creeping.
Right. In terms of what this means for Hindalco shareholders right now, Rakesh, if I were to ask you to break it down simply, Novelis now being listed, is it positive in terms of dividend payout? It's not yet clear what Hindalco will do with all of that money as well. So if I were to ask you to break it down very simply, today, as of this point, what's in it for a Hindalco shareholder?
So one, Hindalco shareholders probably are looking at a better valuation of Novelis than what Street was building in. So that is the first uptick for Hindalco shareholders. Secondly, as you rightly pointed out, this money comes in, and as we discussed, that there's hardly any capex requirement. So whether this money will come back to shareholders in form of dividend buybacks, or the company has some plans for large acquisition, we are not sure. So we need to wait and watch whether this money really comes back to the shareholders or not. And so overall, as I said, that immediate reaction should be positive, but once the dust settles down, we'll have a clearer picture. On the margin, I would say it will be positive.
So Arora, it's also Samina joining in. In terms of valuations, would it be possible to quantify it? A 6 to 6.5 times EV EBITDA would value it at 12 to 13 billion. There are some analysts who believe that any valuation, any number sub $17 billion may actually not do well for them. Is that the opinion you have? Have you worked out the numbers here? What is a number that would please the street and investors at this stage?
So it's a very subjective. As I said that, we have seen some irrational moves in the renewable space where, valuations are very high. Because a lot of ESG funds are vying for the same, asset. So we have to wait and see. As I said, that, currently Indian analysts are valuing Novelis at 8 times EV EBITDA. Can it be 12? Can it be 15? It is quite possible. Number two is that what could be the holding company discount? The holding company discount normally could be anywhere between 20% to 60%. So this is a wide range that we are working with. So I would say that, near term positive, but, longer term, there are some questions to be answered.
Rakesh, the quantum of stake that Hindalco will look to liquidate, will that have any bearing on stakeholders?
I mean, till the time it is in the range of, 25-30% at the max. I don't think it will have too much of bearing, And in any case, there was no cash flowing from Hindalco to India. So that again, meaning there's no major change out there.
In terms of the ESG play, something that you mentioned right at the start of this conversation, Rakesh, and I found that quite interesting, that at the end of the day, Hindalco is, from a global ESG perspective, still in a quote-unquote dirty, polluting business. Novelis is the green play, but we've seen the downside risk to it as well in terms of cost overruns, what happened with their engineering and design projections for their huge project in the US, the Minute Bay project. And does that overhang then continue? Because you don't really know what is going to be the ESG model going forward, isn't it?
No, so ESG model is very clear. The question is what will be the returns from that project? Will Novelis be able to push up the margins to compensate for the capex, the higher capex that they have to entail? Currently, they are guiding for $500 per ton. And for the new facility, can they do like 600, 700? Because if they have higher portion of auto, auto already does more than $800 per ton margin. So there are levers for Novelis to improve returns from that capex also. It came as a shock because the earlier guidance was lower. But overall, in ESG investing, and this is a little bit of sentiment driven, people can digest much lower returns than a normal business. So a pure play Novelis can attract higher valuations.
Very lastly, Rakesh, what is your stock call on Hindalco, and if there is a re-rating on the cards, what is it going to take? Will a Novelis listing encourage you to relook at the rating you hold for Hindalco at this stage, and a target price on that also will be useful?
So I would say that Hindalco stock price has corrected post the Novelis results and largely baking in the negatives from the higher capex. So initially there will be an uptick because people will start speculating on Novelis valuation. So the stock has found a bottom, and maybe there could be a little bit of an uptick there, and maybe today we have a positive opening. But longer term, as I said, that the equation is a little bit complex, and we need to wait and see how things pan out on holding company discount and Novelis valuation.
Right. Thank you, Rakesh. It's great having you on the show. That is Rakesh Arora giving us a sense of Novelis seeking approvals to go out and list on the securities exchange. It could be a big boost coming for Hindalco investors. They will be monetizing some percent of the stake. Rakesh indicated offloading about 25-30% is what he's expecting. At 6 to 6.5 times EV EBITDA, the deal could be valued anywhere in the range of $12 to $14 billion. But remember, some analysts believe that anything sub 17 billion may actually not do too well for stakeholders. But for now, it's good news. You could see a bump up on Hindalco, guys, especially after the badging the counter got after it posted its earnings. Even Hindalco's earnings couldn't save Novelis.
Yeah. And it was because of the quantum of change that the management indicated, that they seem to have gone wrong on so many things as far as that Bay Minute project is concerned. Cost override, timeline override, all of it out of whack. And that is a point we were talking to Rakesh Arora about as well. While a green energy play is very attractive, especially to foreign funds, the question about execution still lingers. And Samina, you got some clarity on the valuations as well from Rakesh, and that's the other key, because that's a figure which is not out there yet.
I mean, Rakesh did say it was very subjective, right? So it's only going to depend on what analysts believe. But he did say about 6 to 6.5 times EV EBITDA would be a fair way of, or a fair pricing in the case of that. Also, one more stock that I want to talk about before we slip into break, if that's okay, is Minda and Precall. I don't know if you guys have discussed that. But
no, but we must. Yeah.
They've got a little bit of a background, and we'll first tell you what the approvals have come in. The CCI has approved Minda Corp's proposal to acquire 8.79% stake in Precall. Remember, 3 to 4 months ago, Minda owned 15.5% stake in Precall. They did try and push for a hostile takeover of Precall, where the CCI came and shut the deal and did not approve for further stake buy in Precall. Very soon after CCI rejected the request from Minda to do that hostile takeover of Precall, Minda went out and dumped all the equity they had in Precall. So they went down from a 15.5% holding to zero because the hostile takeover was actually rejected by the Competition Commission. Now what we're seeing this morning is they've actually got an approval to go out and acquire 8.79% of fresh stake in Precall. One way of looking at this is just an approval. Minda may still go out and refuse it because only 9 to 12 weeks ago their request was rejected by the Competition Commission. They went down to zero. It's an interesting takeover of sorts with the Competition Commission rejecting, going back on its word, coming back with the lowest stake. It'd be interesting to see how this plays out. But watch both those counters in today's trade. We'll take a break. We'll come back as always at 8:30. We'll get ready for the F&O trade setup. So stay with us.
back. You're watching the India Market Open. Let's take a quick look at the top headlines at this hour. The US markets are off to a weak start. Nvidia has led the tech decline on concerns of high valuations. The stock was down 4% ahead of numbers that it will put out today. Back home, Hindalco is the big story. Its US subsidiary Novelis will go public. Proceeds from the issue will go to the promoter Hindalco. And yet another big block deal. Yum Restaurants likely to sell 4.4% stake in Devyani International at a 7.6% discount. Citi is bullish on the India equity strategy, says investors view top-down India as attractive, also hails the supportive macro environment ahead of elections. And farmers will resume the Delhi Chalo March today. Unions are demanding the legal backing of MSP and calling for it to include all 23 listed cash crops. So those are the top stories, but of course action now on the F&O space where we're ahead of Bank Nifty expiry. And what moves we've been seeing on the Bank Nifty, Agam?
Yeah, certainly, and a lot of that can be attributed to the strength that we've seen in HDFC Bank yesterday, and that will continue to be in focus today because of the kind of short covering that we've seen as far as the HDFC Bank goes. But let's start off with the Nifty. At life highs, just shy of the 22,200 mark. We've seen unwinding as far as the futures go. And moving on to the Bank Nifty, that will be in focus because the weekly options expiry. And we haven't seen too much change in open interest, even as the underlying advanced by around 1.2% yesterday. Now, to talk about the Nifty options, this is the picture. Unexpected lines, perhaps, considering the Nifty moved higher. We saw a little more writing around the 22,000, 22,100 puts. And this also establishes 22,000 as a little bit of a stronger support now as we move, see the Nifty move higher. Of course, on the higher end, we'll continue to see traction around 22,500, 22,600. Speaking of which, let's pull up, the overall open interest distribution in the options market. As I was suggesting, max OI around 22,000 put, and on the higher end, watching out for 22,600. That's the call. That's where we're seeing a little bit more accumulation. And finally, coming down to the Bank Nifty. Now, the Bank Nifty has moved above 47,000. And we are also seeing a lot of traction there. Perhaps a little bit of, consolidation expected around 47,000. But considering the Bank Nifty broke above that after hanging on within a range of over the past 10 odd sessions, well, there could perhaps just be a little bit more covering on the cards. That's a wait and watch on that one. Let's talk about stocks then. And of course, Deepak Nitrite saw longs, but besides that, Hero MotoCorp, Rampur Chini, Coromandel International, and Cholamandalam, well, looking at declines with shorts building into the system. And in terms of stocks which saw unwinding in trade, well, we saw short covering in RBL Bank and HDFC Bank, and, well, some longs unwinding in Coal India, Federal Bank, and Tata Steel. So these are some of the names that we can watch out for in today's day of trade. But what do you make of these markets? Let's get in an expert opinion. We have Ajit Rambhia of Ajira Ventures who's joining us on the show. Ajit, good morning. Thanks for joining in. My question naturally at this point will be, the Nifty is at life highs. We're also starting to see short covering in the Bank Nifty as well. How have you placed as far as these indices go? How would you go about them?
Good morning, Agam. Thanks for having me on the show. So as we observe the current market scenario, we have had a very impressive rally. Last few days, the indices are making new all-time highs. So our one-liner will go generally, as the data suggests, in normal markets, the ratio of small caps and the large caps. So the large caps is normally 80% of the market capitalization, and small caps are around 20%. But now the ratio has changed drastically. It is around 55 to large caps and 45 to small and mid caps. So the mid caps and the small cap market are looking overbought and somewhat in a bubble zone. So we suggest our viewers and have a strategy to book profits in small and mid cap stocks and shift to good quality large cap stocks. So that goes for the overall market. Now talking about the indices, my view on Nifty remains bullish with key supports at 22,100 levels and resistance at around 22,500 levels where we see the open interest. And shifting our focus to Bank Nifty, which has a weekly expiry today, our bullish sentiment prevails with the support at 46,800 levels and resistance at around 47,600 levels.
Right. So, Ajit, let's take one of the constituents on the Bank Nifty forward. I believe you do have a trading idea with Kotak Mahindra Bank. Can you take us through that?
Yeah, we have a bullish view on this counter. So we can clearly observe a trend reversal here. So we can initiate a bullish butterfly strategy where we buy 1760 call at 31 rupees, sell two 1800 calls at 14 rupees 50 paise each, and buy one 1840 call at 645. So the cost of the strategy is around 8 rupees, and we stay long in this counter.
Okay, long in the counter, and of course you tend to make the most of the profits should you see Kotak Mahindra Bank expire somewhere around 1800 rupees per share, because that's where you are in fact going ahead and selling two options there. But BHEL is the other counter which has been on an upward move, even though it's seen a little bit of a correction of late. What is your take here?
So we see this correction as consolidation, and we have a bullish view on this counter. We can initiate a covered bull call put strategy where we buy a February future at around 231. We hedge it, like we cover it with buying a put, 220 put, which is the support price at 270 paise, and we sell a 250 call at 2 rupees 55 paise, which is our target price. So we safeguard ourselves by buying a put at the support price and covering by selling the call at the target price. So we cover the price of the put bought.
Okay, so not unlike your usual spreads that you place. Of course, in this case, it also involves buying a future as far as BHEL is concerned. But on that note, Ajit, thank you for joining us and taking us through your ideas this morning. And well, with that, it's over to you, Samina.
Thank you, Agam. Those are a few stock ideas coming in from the F&O specialists, and of course, Agam highlighting all the F&O action that we will be keeping an eye on today. Well, there'll be a whole bunch of stocks that'll be moving on fundamental news flow and brokerages. We have a list of brokerages with their calls on Jindal Steel and the oil and gas sector as well. Mika is joining us on that. Mika, oil and gas stocks have been on a tear in the last, actually not even in the last couple of months. Stocks like MRPL are up about 60% in a month. What are brokerages saying about the oil and gas pack, and also on Jindal Steel, I believe you've got a brokerage view?
Yes, I'll start with the oil and gas pack. We have MK on the OMC, while the ratings on IOCL is an add, and on HPCL and BPCL there's a buy. But the targets do indicate a downside to the current market price. But however, the Q4 refining outlook remains positive for the companies, as the benchmark gross refining margins have averaged around $8 per barrel, which does imply a sequential improvement. There's also no build-up of sizable inventory gains for Q4 as it was seen in Q3. Then the gross marketing margins in petrol and diesel have averaged around 9.2 and 4.6 rupees per litre respectively, and that means the overall marketing performance on a Q-on-Q basis is better. They do expect Q4 numbers to be closer to the Q2 run rate of FY24. They also with increased visibility for FY25 earnings could drive the stocks for a re-rating, and post-election there is more optimism seen in the space. With regards to Jindal Steel, we have Motilal Oswal, which has maintained a buy rating at a target price of 900 rupees. Now, Jindal Steel is currently ongoing expansion, and this will help increase their share of flat steel products to over 55%, and also increase their crude steel capacity by 65% to 15.9 million tons. The expansion completion is expected to come around Q2 of FY26, and this will help the company become the fourth largest steel manufacturer in India. The firm is also developing various WAPs on value additional products on the additional capacity, which will help drive the margins, and their focus on their raw material integration will benefit cost synergies and also help during extreme steel and raw material cycles, as their raw materials are very price sensitive. And lastly, the Indian steel demand is expected to remain robust mainly on three things. One is the improvements in construction activity, the infrastructure project push that has been seen, and the high automobiles, renewable energy, and the consumer demand. And lastly, the stronger steel demand that is seen in Q4 will help the company drive its margins.
All right, thank you for that, Meka. A couple of interesting reports over there, and especially on the OMC space. Samina, the expectation is that the government will, of course, through companies it owns, because technically it's all market linked, will give some relief on excise ahead of the elections, and that's being seen as negative for these companies.
Indeed, but I think, and that's what a few reports are looking at. If you look at valuations as well, and these stocks have been doing exceptionally well from the time of, I think, end October is when the rally started. We're in Feb. There is no stopping some of these names. IOC, HPCL, BPCL, MRPL, Gandhar Oil have all been doing exceptionally well. Valuations, though, many years ago, then IOC, HPCL and BPCL traded at 2 times PE. Today, if you look at those valuations, it are almost over and more than doubled, actually. So anywhere in the range of 4 to 5%, when you 4 to 5 times is what we have for HPCL, BPCL, and IOC. There is no stopping. 50% of the revenue for OMCs comes in from retailing fuel. But like Tamanna indicated, if there's any change on excise, this will turn out to be a negative, and the rally could get arrested.
My point is that there is no real pressure to reduce rates. There's no real pressure electorally, because they are confident of winning. Yeah. So they don't necessarily
So maybe that
have
could
to.
be the underlying, right? That could be why some of these counters are not relenting.
Absolutely. It seems very obvious that they may, but they may not.
Yeah. In fact, Tamanna, we caught up with Probal last week, and he said he's got to go back to the drawing room almost every 36 hours and go back and revise his target price, because some of these stocks have been going up 10-15% every single day. So that's largely the oil and gas bag. There's a brokerage upgrade on them. We will talk to our analysts a little bit more about this. But the India story remains intact, and as the big picture today, Citi has said that they report on Indian equities. Mahima's got more details on that. Mahima, Citi in its report says that foreigners still love India, but they are on the sidelines. So markets looking expensive, and especially when compared to peers like China.
Right, Samina. So as you rightly mentioned, they've said that there has been increased interest amongst the global ex-US funds as India's weightage has gone up from 2% to 5% in the last 5 years. Now, this is because of the market rally that has taken place. However, they've stated that high valuations remain a key struggle, which is leading to money staying on the sidelines. Now, they've also said why they have a favorable bias towards India. They've mentioned that the secular growth outlook is very relative to its peers. They've also mentioned that expectation of policy continuity post-election outcome seems to be a positive, seems to have a positive impact on the equity markets. They've also mentioned about India's weightage in the MSCI. They've said that India's weightage in MSCI World ex-US Small Cap Index is at 8.1%, which is increased from around 3% to 8.1%. Then India's weightage in MSCI All Country World ex-US Index has gone up from 2.4% to 4.9%. Now, they've also mentioned that how a lot of investors are focusing on small and mid cap instead of the large cap funds, and they've seen now this is because they've seen a significant outperformance in the small cap and mid cap in the last 1 year. However, they've also mentioned that the skepticism on continuity of mid performance and what could drive the underperformance is there. Also, they've said that the top-down approach is attractive in terms of valuation. However, the investors are struggling with high valuations, and they've also given an outlook on the IT sector where they've said that they see some kind of improvement by FY25, and they've seen that the pace of recovery in discretionary spending will be a key thing to watch out for. They've also mentioned other things that will be on the key radar to watch out for, like the banking sector challenges, the public capex growth slowing down, the PSU rally, the mid-cap outperformance, and they've also given some stocks that will be in focus like L&T, HDFC, ICICI, Infosys, and so on. So this is the overall outlook of what the Citi has given on Indian equity strategy.
So it looks good, Mahima, it looks good for us, but of course looks expensive. That's what foreigners sitting outside the country think. Remember, our exposure in the larger piece has actually gone up significantly in funds ex-US, one because of the rally, and second because of stock additions that have happened in the last couple of years. Well, Tamanna, apart from equities, our inclusion on JPM and potentially Bloomberg. So it's not just equities, debt, or rather debt has led the way of India's inclusion, and now of course you've got equities, Indian equities in the global funds that have seen increased exposure.
And, what's interesting, and we'll speak about it a little later in the show as well, Samina, but to my mind, is that you're seeing Nifty at new highs, you're seeing market strength without any real solid FII participation, which is expected, like you said, is on the sidelines. You're probably going to see it coming through once China improves, perhaps an emerging market start attracting more funds, India will get some spillover. So you're already on a good wicket, and with one positive tailwind possibly on the horizon at least. The question is, how much can we sustain? Chandan, Taparia and Mayuresh, Joshi with us this morning to discuss what the day is going to look like. Very good morning to both of you. Great to speak with you here on India Market Open. Chandan, let me begin with you. And of course, levels, because look at where markets are going, defying gravity. We've closed above the 22,200 mark quite definitively. Where do you see us sustaining?
Good morning. Thanks for having me. Really, the bulls are charged up to gear the market on higher note. It recently took higher base at 21,500 zone and now started to form higher highs, higher lows on the daily scale. It managed to surpass previous high of 22,124, 22,126. And the base of the market is shifting higher, and we believe that now till it holds about 22,000, the ongoing momentum could continue towards 22,500 zone. However, we have a positional target of 24,000, but that is for next couple of months. But as of now, we believe with support of 22,000, one can continue with long position for immediate target of 22,500 in the Nifty levels.
Chandan, that's the call on the Nifty. What is the story on HDFC Bank at these levels? Fundamentally, the tide seems to be turning. Technically, charts are supporting and this looking supportive at this stage?
Yeah, so like Bank Nifty started to witness some decent buying activities in last few days, and major contribution is now coming from HDFC Bank. The stock is beaten down and recently it formed the double bottom kind of pattern on the technical scale. We also noticed some sort of put writing activity, which is an early sign of any FNO stocks to bottom out. So I believe the recent bottom of 1360, 1380 already proceeded, and now we believe that some up move could be there. On weekly chart, it has negated its lower top, lower bottom. So I believe some more swing could be there towards 1500. So one can play the bounce with support of 1410 for an upside move towards 1500. And because of that, Bank Nifty also has potential to move on higher side. With support of 46,700, we will continue to be with buy on decline stance in the Bank Nifty as well for an upside move towards 47,500. So bullish stance on HDFC Bank, and because of that, Bank Nifty as well.
Please stay on with us, Chandan and Mayuresh. Just switching gears for a couple of minutes, because somber news coming in this morning, and we must address it because eminent jurist and senior advocate Fali Nariman has passed away at the age of 95. And he is one of those eminent jurists that have stood up for the independence of the judiciary, and really, shaped in a lot of ways how respected the Indian judiciary is right now. So he argued several landmark cases, including the NJAC verdict in June 1975. He resigned as the Additional Solicitor General of India to protest against the decision of the Indira Gandhi government to declare emergency at that time. Huge contributions to the Indian story, in fact. Kapil Sibal, senior advocate, with us on the phone line now. And of course, he's Member of Parliament. Mr. Sibal, very good morning. Thank you for speaking with us here on NDTV Profit on a sad day indeed. Just for the benefit of our viewers, do give us perspective of what a huge loss this is and the great contributions of Mr. Nariman.
Oh, absolutely. I don't think that we've had, lawyers like him, stride the corridors of the court. He was one of the greatest sons of India, perhaps one of the greatest advocates that I have met. But apart from all this, he was a fabulous human being, one of the kindest persons I have met. He never had a negative word about anybody. He had enormous wit and empathy. And the most important thing is that he stood by values that he espoused. And he always stood for the independence of the judiciary, standards in politics, standards in lawyering. And he was part of the growth of constitutional law in this country. There are very few like him that I have met. And of course, I was very, very close to him, and for me, it's a great personal loss. The likes of him are seldom seen in the corridors of the court.
You know, Mr. Sibal, it's definitely a tough time, and as you said, a personal loss for you as well. If there is one sort of lesson or learning from your interactions with Mr. Nariman, what would that be?
Stand by your values. Stand up to executive excesses. Do not be afraid. It's time to defend the Constitution and the laws. Democracy is something that we all must cherish.
Thank you so much, Mr. Sibal, for speaking with us. So definitely a huge loss with the passing away of this eminent jurist. But let's turn our attention back to markets. We're about 9 minutes away from pre-open. We had to pause our coverage there to, note this huge loss to India and a great son of India, as Kapil Sibal described it. Let me come to Mayuresh Joshi, though, on what we're seeing in Indian markets right now. And Mayuresh, those who have been waiting for a correction to come, an opportunity to come in, must have been holding their breath too long. The question that I have for you is whether the turnaround that we saw yesterday in private banks is a flash in the pan, or we're going to see more strength behind an HDFC Bank, a Kotak Mahindra and Axis Bank, which will fuel the next leg.
Morning, Tamanna. Morning, Samina. Morning, Chandan as well. No, two things here, Tamanna. Clearly, I think for India to grow and industries to grow, the support of the financial system is mandatory. And therefore, I think the banking system has to do really well if the economy has to do well. Having said that, the kind of turnaround that we probably see for the system as a whole, GNPAs, net NPAs have come off quite significantly. You've seen a lot of buffers getting created as far as provisioning is concerned. Capital adequacy looks extremely strong. And all the moves that the regulator has done, I think, commendable on RBI's part on all these aspects, including liquidity management, which has tided us over even the COVID crisis periods. And therefore, I think my take is that banks over a longer periodicity of time should continue doing well. Obviously, I think the large cap banks, to the likes of HDFC Bank as an example, I was just seeing a tweet where all the memes of HDFC Bank have started coming in, and they're comparing that with the ITC memes in 2020, and you've seen what happened with ITC. So I think not necessarily suggesting go out there and buy HDFC Bank, but generally I think banking should do well. Advances growth should normalize. And in a scenario where rate cuts should start coming in at some point of time by the end of this calendar year, the expectations in terms of advances growth going at a decent pace, deposits coming back into the system gradually, and therefore expectations in terms of stable balance sheet growth is a given. So I think large cap names, in my opinion, if anybody's holding, should continue holding. ICICI, IndusInd, SBI. For HDFC Bank, probably it might consolidate along with Kotak for some periodicity of time. But at some point in the first half, I think the worst should be behind. And as synergies start building in, from a balance sheet perspective, I think a large part of the earnings growth should also start coming back. So structurally, we remain positive on the BFS as a space.
Right. Chandan, Mayuresh, stay with us. We'll slip into a break. We'll come back, gear you up for trade, and also continue talking to Chandan and Mayuresh about their top trades. So stay tuned.
Welcome back. We're just a couple of minutes away from pre-open. Are we going to continue? Momentum is the big question. The other big question actually is, what do you do in a market like this? Chandan, let me quickly come to your top picks for the day. You're on mute, Chandan.
Yeah, thanks. I'll focus more on to play the momentum in the sector which are outperforming the broader market. I'll be with selective power energy counters with the view that most of these stocks can rally by 5 to 8%. However, at the same time, we have positive stance on the banking name, including ICICI Bank, Axis Bank, and SDFC Bank has bottomed out. So talking about trading idea, first is buy on NTPC, one of the strongest setup, making high tops, high bottom on the weekly scale, given the recent highest daily close with built up of long position. So one can buy NTPC with support of 337. And here we have a target towards 360 level. Second trading idea, that is buy on Power Grid. Technically, it completed a pole and flag pattern, which has bullish implication, expecting further rally. So one can buy with support of 282. And here we are expecting a momentum towards 300 zone in the Power Grid.
Mayuresh, did you acquire, add, or own HDFC Bank? If yes, tell us what your views are. If not, when would you buy it, if you would ever buy it?
So no, not at this juncture. And as I said, I think it might go through a consolidation phase, Samina, for some length of time. Because if you go by the management and their take in terms of how their balance sheet is shaping up, Q4 might be equivalent to what Q3 was. So they are not going to chase growth. They're very, very clear on that. They're not going to chase high-cost deposits. And they are going to let the system work in terms of the deposits that they have as legacy from HDFC as well. So as that starts seeping in to the system and as that normalizes in terms of the cost and revenue synergies, I think Q1 of the next financial year can be a base. And earnest recovery can start from Q2, coinciding with some element of rate cuts that happen in the system as well. So I think it might still go through a phase of consolidation, in my opinion. I think what we continue to hold in our global portfolios are banks like Axis Bank and IndusInd Bank.
Axis, IndusInd, HDFC is still in a void for Mayuresh. Anushi is standing by with the whole host of other counters that will be in focus this morning. Anushi, what do you have? Likes of ABB that reported earnings today?
Right. So coming to the stocks that are in focus is, first of all, I'll start off with Minda Corporation and Pricol, which is in focus. Again, over here, this is after the CCI has approved about a 8.8% stake purchase in Minda Corp. Again, this is after Minda Corp had earlier exited its 15.7% stake for a consideration of about 657 crore. Next on the list is Thermax, which has entered into the license and technical assistance agreement with Flowtech, which is based in Korea, with which it aims to strengthen its chemical portfolio business. Again, this is for a consideration of about $300,000. Ashok Leyland, here the company is setting up a new integrated CV plant which is focused on the green mobility side of the business. Initial plant capacity of about 2,500 cars per year, but they want to expand this to 5,000 vehicles per year. Looking at other on the list is Z. So Z Entertainment, again, a lot of talks over here with the company clarified that it is not being involved in the $10 billion revival plan that with the Sony merger that had earlier been called off by Sony in Jan 22. So that is definitely on watch out. And ABB mixed set of earnings, about revenue growth of about 13.9%, while the margins broadly remained in the similar range. And again, the profit saw some uptick. So definitely these counters should be in focus today.
ABB indicating to a marginal gap up this morning. Mayuresh, did you look at ABB's earnings? They were better than what the street was expecting, at least on the face of it.
No, a little bit better than what the street expected. Absolutely right. And I think this entire pack, ABB, Cummins, Siemens have done exceptionally well. Now, broad expectation that is being laid out is the next quarter, the orders might start tapering off because of elections, but they should come back very, very strongly from the first quarter of the next financial year. And as execution continues to improve in the second half of the next financial year, the numbers on an annualized basis should be reasonably better as well. So I think if you take a long-run approach for the next 2 to 3 years, stable order flows with better margins, expectations of better execution on these orders, therefore creating an operating leverage onto their balance sheet seems to be a probable base case scenario. Obviously, all these stocks have moved up quite significantly. So I think the valuation comfort probably not there. And if there is some element of earnings miss that probably comes through in any quarter, you might see some element of derating that can also take place. So in a nutshell, I think no fresh buys at this juncture. Obviously, wait for pullbacks. But anybody enjoying the momentum for these stocks at lower levels can continue doing so.
Let's take a look at Hindalco. Hindalco is perhaps going to be the stock of the morning. Pre-open already, you're seeing a bump up because of the Novelis news. Its arm, Novelis, which contributes about 60% to its revenue, is going to be listed. They're going in for an IPO. So obviously in pre-open, you're seeing a bit of volatility in the stock, but definitely a positive sentiment playing out there. Now, what's not clear is the size of that IPO. Of course, the proceeds will go to the parent Hindalco, and what exactly they'll do with the money. Mayuresh, do you see at least the Novelis IPO news retracing some of the negative sentiment which had come with the overhang of this company's large project delaying?
Yeah, so to that point, Tamanna, I absolutely agree. What is the size of the IPO and exactly the purpose of the proceeds that is going to be used? But having said that, I think some piece of positive news after the huge capex announcement that they did. So yeah, I think that should be taken positively by the street. And the Novelis management itself, if you look at the presentation, is very, very hopeful in terms of the reported EBITDA as well. So they're expecting around $525 in Q4 and taking that up to almost $600 over the next few quarters as well, with solid improvement in terms of both shipments and the beverage can business as well. So the business outlook looks very, very positive as per management speaks say. And therefore, I think if the IPO size is reasonable and if the IPO size proceeds are going to be utilized to a certain extent in terms of protecting their balance sheet, I think the street should take this very, very positively.
Absolutely. Mayuresh, I know you have to go, so thank you so much for joining us this morning. We're looking forward to an exciting opening. Chandan Taparia, though, meanwhile, with us. Chandan, would love your take on Hindalco.
Yeah, so we have seen some volatile swing in the counter, and the setup has slightly turned negative. However, some recovery may be there, but it would be very tough to play the name because volatility has seen a spike and technically it formed a inverted pole and flake pattern. So I'll wait for a decisive move, then only I'll go for buying interest. As of now, 525 is a major hurdle. Above 525 only, Hindalco can witness some short covering trigger towards 545, 550. So I'll only wait and have a conditional trade above 525 marks in Hindalco.
At least pre-open is indicating to an opening of 530 rupees. So about the decisive level of 525 that Chandan was pointing out. 550, 540, 550 is a range on Hindalco. Another counter that's been on the loose has been MRPL. Chandan, 60% gains in a month. This morning too, after a little bit of profit taking yesterday, the stock is back in the green. 276 on MRPL. Is there any more upside left here?
Yeah, momentum is clearly visible, and this stock has really done a great work in last 11 months, continuously making higher tops, higher bottom, and every month-on-month basis, it closing on the positive note. Just a couple of months back, it gave a major yearly breakouts, and momentum looks for the fresh leg of rally. We have noticed delivery volume, which clearly indicates that ongoing up move could continue. Some volatile swings may be there, but one need to hold the positions. We have support near 262, and with that support, the stock has potential to rally towards 290 to 300 levels.
Chandan, I'm wondering if you have your Minda on your radar, Minda, as well as Devyani International and Whirlpool, three stocks which of course have seen a lot of news around them, but I'm wondering if you're seeing any potential on the charts.
Yeah, so if I talk about Whirlpool first, then I'll talk about Devyani and Minda. So talking about Whirlpool, we have seen some sort of negative swings in the counter. In fact, volumes were there when the stock was going down. So here I'll avoid, because weekly setup is negative. We are making lower top, lower bottom. So here I'll avoid. But if you look at the Devyani and Minda, then some positive move could be there. Devyani has from the bottom. It recently corrected from 197 to 147 and now negated its lower top, lower bottom. So with support of 160, Devyani has potential to move towards 172 level. Talking about Minda, Minda has potential to witness some bounce. We have seen decent volume in last 3-4 trading session, which clearly indicates the fresh leg of rally could be there. It is continuously making higher tops, higher bottom on the larger time frame. So one can buy the support of 418 for an upside move towards 450.
Right. Chandan, How does Z look after, of course, I know it's in an F&O ban. It's been on a downward spiral. Did gain a little bit yesterday, now 10% on the counter in pre-open, 174. How much more from here, Chandan?
It looks crazy and it's very tough to catch the moment because trend is negative, but it keeps on moving up and down. So it would be very tough, very volatile counter. But yes, we have multiple barrier near 200 marks. We have witnessed sustained call writing activity. And now, yes, after the previous day recovery, when it's opening down, then again setback will be there. So I'll avoid. And I think stock has potential to drip down to us 165 to 160 levels.
Wow, 165. So the trend very clearly downward on Z Entertainment. The stock was up 10%, 7% yesterday. Now seeing a low circuit or a low hit of 10% on the counter. Well, those are a few names that will be in focus this morning. There will also be names that will be seeing, potentially could see a block or a bulk deal take place. Varsha is joining us with more on that. Varsha, yesterday the day was all about Whirlpool. Before that was Sula Vineyards. What is expected today in terms of big blocks?
Actually, Samina, we have QIP issues too. So let's first focus on that. So we have Swan Energy, wherein on Tuesday it announced opening of its 4,000 crore fundraise through QIP, wherein floor price has been set at 703 per share. Now, pricing of this issue would be decided on Feb 26. Also, this proceeds will be used for investment into units also for prepayment of borrowings. And then we have Union Bank, wherein it launches QIP to raise almost 3,000 crore. The floor price is set at 142 per equity share, which is at 1.1% premium. And then we have Varun Beverages, wherein they have entered into exclusive agreement to manufacture and package Cheetos in Morocco. Now, the expected date to start commercial production is at May 1st of 2025, and production will be from their own manufacturing facility. Also, the capex is to be done at rupees 100 crore, and this appointment is in addition to the existing distribution agreement for PepsiCo snack portfolio consisting of Lay's, Cheetos, Doritos, and in territory of Morocco. So this is all we have for today.
Right. Those are a whole bunch of names that we've got that we're tracking on back of QIPs and fundraising plans on the anvil. Well, the markets are expected to see a flattish start this morning. The day will belong to Hindalco. It'll be interesting to see if we follow up buying on counters like HDFC later on in the day. Well, it's another positive day from the look of it for 197 communication. Another 5% move is what pre-open is indicating to. Chandan, is this a stock you like?
You're talking about Paytm?
Yes, I am.
So again, I believe that it's very risky to comment, but stock has bottomed out, I believe. And advises one need to take only position which, along with the risk management, if someone can do. Looking at the wave theory, I believe some sort of bottom has been made in the counter. So with support of 380, we can see once bounce towards 450 level.
Right, that is the call on Paytm. Maybe the stock is bottomed down is what Chandan believes. Apart from that, you will have stocks like Union Bank, ABB that will be in focus. Either of those calls, Chandan, do you have a trade on? Union Bank on fundraising, ABB on earnings?
Yeah, so we have positive on Union Bank. In fact, we release a note on most of the PSU banks. And Union Bank is one of the strongest counter. If I look at the daily chart, it is holding well above its 50-day moving average and respecting well to its rising support trend line. So after the consolidative move of last almost 16 trading session, it is all set for the first leg of rally. So one can buy with support of 142. We are expecting a rally to us 155 in Union Bank. Talking about ABB, yes, major trend is intact. It has recently bottomed out with consolidations breakout on daily chart. It surpasses falling supply trend line. So I believe with support of 4,500, one can look for an upside move to us 4750 to 4800 in ABB.
The other set of stocks that we should focus on are the two-wheelers. And let's just see what Hero has done in pre-open. Pre-open rates have, of course, settled. And Hero set for a second tough day. TVS and Bajaj is also something we should see. So data is suggesting that this could be a slightly slower period for two-wheelers. They were expected to kick off, but that doesn't seem to be the case. And an MS note on Hero is also, voicing some concerns over the slowdown in sales. Chandan, Hero on the charts already, it's seen, I think, in the last couple of sessions, a 3-4% cut. Do you see an opportunity to accumulate here?
So, if you look at the Nifty Auto, major trend is intact. But in between, we have witnessed some profit booking decline. The stock is down by around 6% in this week. But we believe that the stock will continue with major trend. There may be the down gear, but again, top gear could be there once the consolidation gets over. So as of now, let's wait for further decline or some bargain buying. I believe as of now, it has potential to go towards 4,300 to 4,350, where one can accumulate for next leg of rally in Hero Motor.
Yeah, absolutely. So Hero Motor might see the next leg of rally. The question is that how sustainable would it be? Chandan, at this point, where would you see the pockets of opportunity? Are you looking at anything interesting in the mid and small cap space?
Yeah, so I'll focus on power, energy, oil and gas counter. So Oil India is one name. However, it rallied well. It is one of our strongest recommendation in last couple of days, one of the preferred name. So Oil India still has potential to rally by 10-15%. One can buy near 600 with support of 580. It has potential to rally to our 650 zone. So one can look at Oil India. Apart from that, we talked about Power Grid looks strong. It is all set for the next leg of rally. We are expecting an up move towards 300 zone in Power Grid. I already mentioned about NTPC. So that has potential to move to us almost 355, 360. So NTPC, Power Grid, All India, fuel marketing company could be on radar to deal the market scenario.
What about on the private bank space? I just want to quickly pull up Federal Bank, which took a beating yesterday, thanks to the top management rejig of a Kotak Mahindra Bank, which may have, seen them lose a potential CEO candidate, but that stock up today. What would you like in the private banks, Chandan?
In private bank, before I comment on Federal Bank, let me talk about ICICI Bank, where we are expecting fresh leg of rally. With support of 1,035, ICICI Bank can see the momentum towards 1,085 levels, expecting 3 to 5% or beyond that in ICICI Bank. And I think ICICI Bank can support the Bank Nifty to move on higher side. Talking about Federal Bank, buy on decline could continue. I believe with support
Chandan,
of
give us a few seconds. We'll come right back to you. Gearing up for market opening, it is expected to be a flat start on the index after 6 straight days of gains. With a positive bias, I think that's the good news we're looking for. 13 points higher on the Nifty 50. 22,200 is being held on the index. The Sensex also trades with a gain of 26 points. The Nifty looking good, 10 points higher. We might slip in the red briefly as we consolidate, but remember, this is uncharted territories for the markets. The sky is the limit from where we stand. So any sort of restrictions now, of course, will be largely imaginary in nature. But for now, looking very, very well placed on the index, 7 straight morning when we've opened with a very clear positive bias on the street. A quick check on the breadth of the market and, of course, the sectorial picture as well that's playing out. Bank Nifty has come through quite strongly in yesterday's day of trade, largely on back of the contribution from HDFC Bank. 48,000 looks like the next stop on Bank Nifty. You've got 120 points added, about 0.3% higher on Bank Nifty this morning. We look at the contributors to get a sense of what's happening, but the Sensex has now slipped into negative territory. The breadth is got a clear bias on the upside. The stock of the morning will be Hindalco. It doesn't look as great, or it's given up some of its market opening, or rather pre-open gains already. It's off 1% or about 0.7% of the day's high point, but still trading high on Hindalco on news that its jewel Novelis will be seeking a listing. Now, with the timing of this is being questioned. Why does Hindalco need to do it? They have enough and more cash on the books, but interesting move there on Hindalco. Metals generally are looking good, probably following the trend where the liquidity in China will help metal companies. Those gains are very obvious in this morning's trade. JSW Steel and Tata Steel both trading with a positive bias. It's the morning that iBank is looking good. OMC is continuing doing well. Adani stocks also trading with a marginally positive bias. On the sell side, two-wheelers, like Hero Motor Corp, are seeing a bit of a pressure. Tech is looking like a morning of profit taking. Britannia, L&T, Maruti are some of the other losers. So no consistent or no clear trend emerging just yet. It's largely stock play. Breadth is positive for now, but there could be a chance, Tamanna, where we may spend the morning consolidating, especially after such a solid run that we've seen.
Yeah, I mean, if you look at it, the Nifty is struggling to stay above the 22,200 mark, and we'll have to wait and see if that really happens. Should we quickly just see what broader markets are doing before we get to stock specifics as well? Because while you're seeing a consolidation on the top line, broader markets are not doing too badly relatively. The mid cap up about 200 points. The small cap index also up about 0.5%. So that's where the story is perhaps going to lie. I'm going to start with two stocks we've been tracking consistently only because of the kind of fluctuations they have seen. And Zay, which was up about 8% yesterday, seems to have opened really in a lot of pressure at a 10% lower socket because they've denied that they're talking with Sony for finalizing or reviving merger details. But also Bloomberg story saying that SEBI may have found a hole in their books. Paytm, meanwhile, I think this is the fourth session consecutively that Paytm has been on a 5% socket. What is happening with Paytm? Look at how that stock has climbed up from the depths. Is the worst over? Have they bottomed out is the question. Devyani International is the other one that we should talk about today, a block deal over there. Yum Restaurant seems to have exited its stake, about 4.4% stake, and that stock up 4% as well, 4.5% at 173. Richly valued stock doing well this morning. Swan Energy is raising money. It's raising its QIP at 4,000 rupees. Floor price is at 703, so at a bit of a discount. That stock about 0.5% down. Minda is the other one that's been on our radar. They have some relief from the CCI, been allowed to buy their stake and pre-call, and that stock trading about 1% up. But a lot more excitement in that pack this morning, Samina, especially in the broader markets.
It is. It looks far more action-packed than the benchmark itself. Campus Active is leading the gains, 9% gains on the counter. KFin Tech is also doing quite well, 7.5% up move. Union Bank on those fundraising plans gains 5.5%. Insurance is again looking like a good play this morning, 6% on New India Assurance. ABB on earnings is looking good, like we told you. LG Equipment is up 4%. Hindalco is well off the day's high point as we see it, already trading with a gain of only 2%, so 1% off the day's high point. On the sell side, it's unfortunately Z that's taking it to the chin, 10% cut, 174. On Z, All Cargo is also having a weak morning. You've got SJVN, Jindal Stainless and Power is also marginally off this morning. So all in all, you've got Swan on back of that QIP is also seeing some pressure. If I can quickly get pre-call and Minda, let's see what's happening there with that approval coming in from the CCI on, I believe Tamanna has already highlighted that. So no movement. It's not being viewed negatively or positively at this stage. Pre-call is up 2%, but whether or not Minda goes ahead with this deal is going to be anybody's guess. It is a very clear morning where the broader market insurance play is playing on. Chandan, have you looked at New India Assurance? I mean, the rally there is staggering. Even this morning, a big gap up, 6% higher on New India Assurance is what we have.
Yeah, structure looks quite positive, and we are expecting this stock to even hit to us 20% higher marks. Major trend is intact. We have seen a nice breakout on the daily and the weekly scale. So one can buy at current level near 295, 297. Keep the support of 288. We are expecting this stock to head towards 310 to 315 levels. So expecting further 5 to 10% kind of movement in the counter.
Chakri with us on the phone line now. Chakri Lokpriya, managing partner at Red Strawberry LLP. Chakri, very good morning to you, and it's seeming like a good morning. Nifty sustaining above the 22,200 mark, just about there, but a continuing weakness here in IT stocks. Banks also not doing too badly. What do you think you are seeing directionally in the market right now, and are you looking at a sustained revival of, say, the financials and private banks?
Good morning. In fact, IT's weakness is probably related to the U.S. Fed's uncertainty about when they'll start cutting interest rates. It was expected that they would do that sometime in March now, but looks like they're pushing it back. So this uncertainty will continue to weigh on Indian IT stocks because of the interest rate differentials that will support valuations. Overall, the market is, in fact, looking very intact. Banks, we were looking at the valuations, after all the run-up, they're still looking very good. Today Union Bank is a good example of raising a QIP and fully subscribed. And after the QIP, the diluted book still trades at a very attractive underbook valuation. So that is the story largely that replicates itself. On one hand, you have private banks, which are kind of not participated as much as PSUs, but I think PSUs are still the place to be.
Yeah, PSUs are the place to be. Anything you like specifically, Chakri? You spoke about Union Bank, and of course that stock doing very well. But an SBI, a Bank of India, anything that you think has more potential right now, or you'd like to zone in on?
Both these banks are looking good. SBI in the large cap, of course, it is the largest bank in the country with making 1 in 4 or 5 loans. Trading at about 1-time book, that's a phenomenally good valuation if you compare it to, let's say, the private banks, which are trading at 3 to 4 times book value. Now, its ROEs, etc., have all moved up very strong, and therefore, I think SBI from this level does really well. And the same in the mid-cap space, Bank of India, similar story. Again, a very large bank, even though it's mid-cap, but the bank size is a very large bank. And it's traded at about 0.8 times book. So that gives adequate room for the stock to deliver further return from current levels.
Chakri, hi, it's also Samina joining in. What is your view on Hindalco? Novelis apparently is looking or filed for a listing. This is going to be a pretty big deal, a big chunk of money coming the way of Hindalco. Does it have a material impact on the stock? Do you even track this one, actually?
Novelis is a very good, even the listing happens, it's clearly very good news for Hindalco. Novelis being focused on the North American market at a point in time when, the U.S. will start cutting interest rates at some point in the next few months. So cyclical companies do well, so which means Novelis can attract a much higher valuation, so their timing seems to be good. And that will have a positive rub-off effect overall on Hindalco, because as Novelis, the cash that is generated from that will help in the balance sheet of Hindalco and strengthen it further.
Chakri, your top 3 stocks that you're incrementally adding to at this current juncture?
I'm tempted to say that HDFC Bank, simply because it has underperformed for a long time, I would still continue to kind of stay away from it. If you're a positional investor, then yes, maybe. But outside of that, I think it is still the traditional, I wouldn't use the word traditional, but the PSU banks are still the place. Now, the infrastructure stocks, even Adani Ports is looking very strong. Even after the run-up, I still think with its current strategy, the company is poised to do well. And with the recent findings, the productive link, the story about infrastructure basically. So, which means companies like Nagarjuna Constructions, Patel Engineering within the infra space are also looking very strong.
Right, that's the word coming in on a couple of names that Chakri currently likes. Chakri, what is your feel about oil and gas stocks? I mean, stocks like MRPL have been on a tear. IOC, HPCL, BPCL have been gaining since end of October last year. More importantly, their valuations currently seem doubled. But of course, some argue that the HPCL today is very different from an HPCL maybe 5-6 years ago, right? With elections also around the corner, how would you play these oil and gas stocks? Do you still feel that 5-6 times price to earnings, the counters are still attractive bets?
You got it right, Samina, and your view is spot on. That is, the companies are today very different from what they were, and they also have clear plans to participate in the green energy, renewable energy space. They're getting in some amount into smart metering and things like that, which will provide them a new growth path and also reduces the risk to earnings. So I think the current run is more to do with what a BPCL can do or an HPCL can do in the future. And on a valuation basis, ONGC still is a very attractive stock fundamentally. The biggest uncertainty of ONGC has been, various regulatory pressures that the company would have to face. But I think despite that, I think the valuations are attractive for ONGC.
Absolutely. Chakri, thank you so much. And, great to have you on the show this morning. Let me quickly get a view from Chandan before we take a very short break on where you see this market sustaining, especially the Bank Nifty. Chandan, Bank Nifty, retreating from its opening rates right now, and we're also on expiry day. What is the trend line you see for the Bank Nifty?
Yep. So if I look at the Bank Nifty index, overall, we have seen good run up in the last trading session, but today it consolidating at higher bin. So I believe that 47,000 could act as a key level till it holds 47,000. We will continue to be with buy on decline stance. But I believe that in market selective stocks can do well and they can generate alpha. So I think we should focus on the Bank Nifty. Let it come near 47,000, then we can again initiate the spread or buying strategy. But stock specific, I can talk about few names. Those can generate some return. So one is buy on Geofinance. The stock has given a consolidation breakout with support of 281. It has potential to rally towards 300 levels. Apart from Geo, one auto stocks or two auto stock could be on radar. JBM Auto looks good with support of 2300. It has potential to rally towards 2600 levels. And M&M is other name. So apart from some consolidative move in the market, we have to focus on M&M, JBM Auto and Geofinance. And all these three stocks can generate the movement of 2 to 5%.
Yep, absolutely. Thank you so much, Chandan, for joining us this morning. We're taking a very short break at this point, but the coverage continues on the other side. We're back to talk to MTAR Technologies Managing Director P. Srinivas Reddy about the company's business outlook. Stay tuned.
Welcome back. You're watching India Market Open. It's a flat day on the street this morning with stock-specific action continues to drive trade. Well, we have one company that's in focus this morning is MTAR Tech. The counter has been seeing some selling recently post-reporting earnings. P. Srinivas, Reddy, Managing Director of MTAR Tech, joins in to talk to us about the earnings and the road ahead. Mr. Reddy, thank you very much, sir, for joining us today on the show. Sir, on the face of it, the numbers seem slightly lower than what the street would have liked. Your revenues have dipped quite substantially. EBITDA has also come in lower. Margins have also narrowed. I do remember in the second quarter you had revised the guidance on the margin front and on top line. But this time around, even on margins, I think your revised guidance was close to 26. They've come in at about 21%. Can you share with me, is this all part of the transition that the company is undergoing? What's happening?
No, basically, the main issue is with the technology change in the clean energy segment. It takes some time to move from one type of technology or the model to the other, which we're dealing with some of the main customer. And that has taken some time, about a couple of quarters, to stabilize, because it's not only our company, but it's also about the supply chain all over the world. So that's going to be stabilized by end of this quarter, and that's the main issue in terms of reducing our guidance for this year. But we are definitely, the outlook looks very strong. As I mentioned earlier, we're going to move ahead with about 45 to 50% revenue growth next year. And we will maintain a 26% EBITDA margins moving forward. So this has been a correction. It's been a pause for a couple of quarters because of the change in technology. And we are all stabilized right now by end of this quarter. And moving forward, we'll go back to our higher revenue growth for the next year.
That's fantastic, sir. So are we, can I then assume that the fourth quarter of this financial year will see a return to normalcy? Or is it going to be from FY25?
See, the normalcy, yes, it will come back to normalcy in the fourth quarter, more or less. But the major, if you look at the next financial year, we'll be obviously doing a much, the growth will be about 45 to 50%, as I mentioned. But in the fourth quarter, we'll have much higher EBITDA margins. So that's why I said that we will average close to about 24% EBITDA for the year, even though we are averaging about 21.5 right now. So yes, you're right in saying that we'll more or less get back to normalcy in the fourth quarter.
So, you talked about this tech change, and a lot of us who've spoken to you or heard your interviews don't really understand the technicality of this, right? So if there is a tech change and you indicated that this is for, one big client or one big order, and it's the whole supply chain across the world that's going through this change, tell me, what is the impact of this once the transition is complete? Will it ensure you get more orders? Will it ensure more, increase in value from the same order? Break it down for us. Will it improve operations? We, on the face of it, don't understand very much of it. So it'd be useful if you can break that down and explain to your investors and our viewers.
Yeah, see, what happens is that whenever there's a change in the model, in the design, we work with our customer to actually implement it on the shop floor. So once we do that, it's not only us, but the other suppliers as well. We are the major suppliers, but the other suppliers also have to get up in terms of the various port outs or whatever they are trying to do for the company. So it's not only the design change, but also implementing on the shop floor. So this would obviously take 2 quarters. There's a great advantage in terms of upgrading your model. We help the customers as well. And that's something which will obviously, as you said, will not only give us slightly more value add, but also in terms of once it's implemented, we'll also have better orders flowing in for the future, because the customer himself will become a lot more competitive, because the tech change would result in about a 30% higher power output for this new model. So that's the reason why it was taken up very aggressively over the last 2 quarters.
Oh, that's fantastic. How much does this customer contribute to your top line, sir?
So this right now we are doing it about close to, we are up to 70%. Now we are doing probably up to 55 to 60%. But the next FY25, we are growing very well in the other segments in aerospace and other sectors as well. So if you look at FY25, it will be roughly around 40% and odd.
And this will also help you compete for similar orders in the clean energy space, right? So what is the sort of growth in FY25 that you are working with from each vertical? So product mix, if you can give me a breakdown of that.
Can you repeat that? Because
yeah. So I said between aerospace, defense and clean energy, for FY25, what is the increase in contribution expecting from each offering?
Yeah, so as I said, we gave a guidance of 45 to 50%. That's roughly about 900 crores of revenue next year, without considering any kind of upside moving forward. As of today, we have not considered any upside, so we're very clear in that 900 crores, out of which close to about 40% would be specific in the clean energy segment, 40 to 45%, and we're looking at almost like about 20% in aerospace. Then we are also into nuclear division. We're also into defense in a small way right now. So it's a breakup of all this, and that's how we have come up with a figure of 900 crores.
So what does your order book currently stand at? And if you can also help me with what are the conversations you're currently having?
We have a closing order book of 150 or 175 crores. And the major orders, what we're expecting is from the nuclear division for about close to 500 crores of orders coming in. So that we are expecting it to happen by March, but it would really doesn't matter to us because it should definitely happen in first quarter of next year because that's not taken into account for our next year revenues as well. So we'll end up with the orders is not an issue for MTAR. So we are working with a lot of MNCs. We are very strong in domestic nuclear space divisions as well. So we are also getting up to execute our orders in a much faster manner. We are finishing orders with nuclear division in 50% of the time given by the department. So that's how we are moving progressively very well. And so the main issue has been the correction in technology, as I said, and there's nothing wrong with any of the other issues.
So I think you're right. The whole industry, I think that is, focused on nuclear, aero, clean, is not struggling when it comes to winning these orders. And you also said that execution is not a challenge for you. Anything on cash flow? What are payment cycles looking like? Are orders that you've been completed being paid on milestones? Give me an understanding of that.
See, most of our, we deal with very specialized kind of work in the niche area, whether it's a nuclear division or the space. So the payment cycles are mostly, they pay also advances of about 25 to 30%. And as when we progress with the project or dispatches, they pay the balance 60%. And once we complete the project, the 10% retention money is paid as far as the organizations that we deal with. So we have never had any payment issues with any of the organizations that we are dealing with. In terms of exports, we normally, it works on 45 days net. That's what we work on. So we never had any issues in terms of receivables coming into the company.
Sir, also in the export space, any conversations that you want to tell us? What is the sort of contribution that you get from exports? And in terms of guidance, what percentage of your top line will be coming from exports?
Should be around almost 50% for next year. That's the fantastic thing because we have really worked hard on improving because our gross margins on domestic sectors are much higher, but in terms of exports, our operating leverage is very good, even though the gross margins are lower. So improving on the other segments, that's what you can see in FY25 happening, and even moving forward as well. We'll, as I said, even for the subsequent year FY26 as well, we'll have the revenue growth of 30 to 40% band. That's what we have evaluated. So the more we are focusing more on improving our other areas, other segments moving forward, and that's what is happening right.
Right. Just very lastly, Mr. Reddy, before we have to let you go, any risk, any sort of concerns that the stage of a delay in the transition phase that the company is currently underway in terms of the tech, or any of your orders that that may potentially be delayed? I know there was one big order for about 160 crores that's been deferred in terms of payment to last year. But anything else that we should be aware of as we look ahead?
Look, what guidance I've given for the next year and for the current quarter, we have evaluated very carefully. We have not taken any upside or any kind of chances. We always gave guidance in the right manner. Even for the last couple of years, we've always done better than our guidance. Because of this sudden technology change, there was an effect of a couple of quarters. But yes, I don't see any kind of risk moving forward for the numbers what we have guided for next year.
Fantastic. Good luck, Mr. Reddy. Great talking to you today on the show. That's MTAR Tech. It's been in the news. The company is undergoing a tech transition, and that is the only reason we are seeing the earnings slightly more deferred or behind the guidance that was set out. On that note, we'll take a break. We'll come back. We will be talking to Indranil Sengupta, Economist and Head of Research of CLSA, joining in, talking to us about his call on the rupee and the FPI flows.
Welcome back. You're watching India Market Open, and it's looking like the Nifty is hanging on to the 22,200 mark, just about 38 points up. The big loser this morning is definitely the IT pack. Once again, that weakness persists. Infi leading that group, down about 1.5%. Wipro relatively doing okay, flat but doing okay. HCL Tech persistent. Some of the others that are showing weakness. I just want to pull up Hindalco and see what's happening there, because Hindalco was definitely the stock of the morning, considering that the Novelis news has been seen sentimentally positively because they're going to come up with an IPO. That company, that arm, has a 60% contribution to Hindalco's top line. So it's come off the opening sort of spike, but still about 2.5% up at this point. All right, let's talk a bit about FPI flows. Indranil Sengupta, economist and head of research at CLSA India, believes FPI flows will go up to 1% of GDP from the 0.4% they are right now. Very interesting note out there. Indranil, a very good morning. Great to speak with you and have you on NDTV Profit. I was going through your note, and it's a very interesting one. I want to understand first the whys and the by when. By when do you see FPI flows coming back? Because if you look at the data just in 2024 so far, FPIs have been selling, at least in equities. About 29,000 crores in equities have been sold versus a 60,000 crore plus purchase just in December. Why do you think the tide will turn?
Well, I think you should not look at it month on month, but over the fiscal, in which case you have almost $30 billion including debt. So I think that in the next few years, next 2-3 years, we will see FPI flows average about 1% of GDP. It's not every year, but 1 year maybe much more, 1 year maybe much less, but we are in that zone already.
Right. Let's talk about the why. Let's talk about the rationale for why you have seen this. Looking at, I saw this figure in your report that you had FPI flows go down to about 0.2% of GDP between FY15 and FY23. Of course, that's a function of the rupee and a weakening rupee. So is it safe to assume that a reversal in rupee will also fuel these flows?
Exactly. So, if you think about it, the RBI was building FX reserves till the GFC, and the rupee was actually appreciating because, foreign investors had the comfort that if they came in and left, they would not lose much on the currency. So if you go back to the pre-GFC period or even slightly later, you find that FPIs were almost 1.3% of GDP, FPI flows. After that, we ran out of sufficient FX reserves, the rupee depreciated, and that led to a big fall in, FPI flows. In fact, I vividly recall a hedge fund, overseas hedge fund telling me that why will I go to India when, I will probably end up losing my all in currency depreciation. Now that scenario has dramatically changed. Mr. Das has built FX reserves. FX reserves are today $600 billion. And that's the level we think is adequate. And that's again bringing back FPI flows.
I just want to understand the context of it because you're comparing this to pre-GFC. Our forex reserves are getting better, and economy on the whole now globally recognized as relatively stronger, etc. But when you compare it as a percentage of GDP, our growth is also growing at a better pace, isn't it?
No, growth is roughly similar. If you take, in the last. I would say the last 20 years, growth is averaging around 7%. If you leave aside the GFC crisis and the COVID years, otherwise it's averaging around 6.5%. So there is no change in growth per se. The big change that is coming is because earlier we had high FX reserves which provided support to the rupee. In between, we lost that advantage, so the rupee depreciated. Now we again have rebuilt FX reserves, therefore the rupee should stabilize, and that will bring the comfort for the foreign investor.
Right, please, continue that point.
No, like I'm saying that we look at three metrics. Is your import cover 10 months? Do you have 75% cover for FPI equity outstanding? Do you have a 2x short-term debt external cover? All of the three lead to about $600 billion of adequate reserves, which is where we are.
All right. So we're sitting pretty as far as the bank is concerned. So FX reserves are giving that comfort. Completely understood. But I also want to understand, when you're saying that FPI contributions will come in, look at the equity and debt sort of breakup. And the focus has been more on debt recently. You know, rate cuts come into the picture, etc. Can you tell us how you see that playing out? Will FPI inflows into debt consistently increase, or are we going to see another sharp upswing, at least in the medium term, as far as equity is concerned as well?
So equity FPI flows should be a steady story. You see, India's weight in MSCI go up vis-a-vis China, and so that's a pretty much discovered thing. When you come to debt, the fact that we are on the JP Morgan index, the fact that we may get into some other indices, means that we will see good flows, another maybe $15-20 billion of flows by March 2025 or so. So that's one. What is also more important to understand is that a lot of the debt fund managers in FPIs were investing in India at their own risk, because India was off benchmark. They were not obliged to invest. So if something went wrong, the onus was on them to prove why they went into India in the first place. Now that is changing with India in the benchmark. What this will also do is bring in debt FPI flows into the credit market. Although this is not the benchmark for that, but then once you have that justification, it's easier for debt FPIs to also invest in the credit market. So I think, therefore, that the 1% number that I have as both debt and equity, and I think debt flows will also be picking up, consistently, especially because the rupee should stabilize. Yeah. The RBI should be cutting rates, maybe 100 basis points by June 2025. So you get the advantage of FX gains plus the advantage of capital gains.
Wait, I'm going to come back to that and get your view. So you're seeing 100 bips by the RBI by June. So no
2025.
By 2025. So yeah. How soon do you think that begins? Are we going to wait for the Fed? Because the world is waiting on the Fed right now.
I think that the language of the Fed at least has to turn more definitively dovish for the RBI to act. But if you look at it this way, that if you cut rates, you support growth. And when you support growth, equity flows come in. When equity flows come in, the rupee stabilizes and the debt guys come in. So in India, because debt is barely 10% or even less, 5% of the overall FPI investment, paradoxically, rate cuts lead to more flows because they bring in equity flows. So therefore, I think there is as such no reason for the RBI to not cut now to support growth. But then I guess they will want to wait for a more definitive statement, maybe in the March 2024 policy, or let's see when, before they start cutting.
Right. So
but our call has been for April.
Okay, your call has been for April for the RBI.
Yeah.
And for the Fed?
Fed is slightly later, September.
Okay, so that's interesting. We'll wait and see if the RBI precedes the Fed, and that consensus growing that maybe they should. I have very little time with you, but quickly want to bring in the China question when you're talking about FPIs. How much of it will also be determined by a China recovery and then a larger pool flowing towards emerging markets, hence India also benefiting?
So I think right now money has flowed out of China, hidden in countries like India. So any recovery in China will naturally first lead to flows back, but then also lead somewhere to a greater interest in EM per se. So at this point in time, I will say that a reversal in China will be flattish to marginally negative for India's FPI flows at this point, because already a lot of people have come here and China is cheap. So if China turns around, I think money will flow there.
All right, so if China's cheap money will flow there, might not be too positive for India, at least initially. Thank you, Indranil, for joining us. Always a pleasure speaking with you. Indranil there, with a very clear outlook that FPI flows in India will move up to 1% of GDP. We're going to take a very short break. That's a wrap on India Market Open, but stay tuned. Up next is Talking Point.